Good morning, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. Today's date is August 23rd, 2022. This is the morning Forex report, where I'll go through some of the technicals of the major currency pairs, so stay tuned. In Europe this morning, flash manufacturing and service PMI data came out, somewhat mixed, but still near low levels. Some of them are above and below the 50% level, which is indicative of contraction or expansion. They don't normally go that low. The last time was during the pandemic shutdown in early March of 2020. So this is near low levels, but some of the data was a little bit better than expected. Some of it was a little worse than expected. Overall, we saw the euro move up and down as a result, and the pound versus US dollar also did the same sort of price action in their charts, and we'll see that in just a second. We'll start off by taking a look at the euro versus US dollar. On the monthly chart, we did move to a new session low near the 0.99 level. That low took the price, or that level took the price to the lowest level since December of 2002. Well, another new low since December 2002. But the fundamentals in Europe seem to support that case. On the daily chart, what is interesting here is that the high price today did stall near the low price that we reached on July 14th. So that low price in July came in at 99.51.5, and the high price today reached up to 0.99494. So just below that level indicates some ceiling, a small ceiling. It's a close risk defining level for traders looking for a rebound. You got to get above that level if you think this price is going to move to the upside. Absent that, and we're not making any wins as far as the buyers go. The sellers are still winning against those buyers. So be aware of that level. It will be key today and going forward. Take a look at the hourly chart. You can see how the price came up to that old high level. Also note, yesterday off the low price, the price also stayed below that 0.99515 level, indicative of that ceiling there, increasing the level's importance going forward. So all is still bearish for the euro versus US dollar. Now, if there is one thing that I never look at, but I was tempted to look at it here today, is the RSI. 14-bar RSI in the daily chart is moving down toward the 30 level, which is typically below 30 is an oversold level, and we also have some diverging RSIs compared to the low price here. So we're making new lows. We have higher RSI, which can be a clue for a potential rebound. I will not use that level, that clue as a sole reason to buy, because it doesn't define your risk and limit your risk. You can continue to diverge, and the price goes lower, and you lose lots of money because of it. And then it's just it doesn't give you a borderline that says that you that here is your risk. It just says that you may rebound. So understand that clearly. What would give you some increased confidence is if the price were to move above, for instance, the 99.51 level, and then you may see that corrective move to the upside, because we have a risk defining level, the 99.51 level, the ceiling that was broken, and so get above that, we can use the old ceiling as our risk defining level. Understand? So just be aware. Diverging RSIs on the daily chart, but the bias is still to the downside. Let's take a look at the dollar versus yen on the daily chart. We moved above the over the last 3 days. We've moved above the June high. Okay, now in July, price moved higher, and in August we moved above, the price moved back above the June high on Friday, and again yesterday we closed above it. So and in trading today, just like the euro, we came down and retested that June high and found support buyers. So that's somewhat bullish against the 137 level, short-term trading, risk-defining level for perhaps intraday traders who are looking to sell would want to see the price move back below the 137 level. But clearly the bias is more to the upside with 1, 2, 3, 4, 5. Working our 6th day to the upside. Yesterday we closed at 137.50-ish area, so we're currently trading at 61, up for the 6th day in a row. So this is what it looks like on the hourly chart. And if I go back, these yellow areas represent our support areas. They're swing areas. Looking back, a swing low, a swing high, swing high, swing high. Moved above it, tried to hold support above it, couldn't. So this area between 136.91 and 137.15 need to get below that. And trading today, the market did move into that area, but found support bars, and again moving higher on the day. Now this other swing area up here is a little less defined, 137.37 to 45. Might be a short term, but really we need to get below this area right here in order to kickstart more to the downside for the dollar versus yen, in my opinion. Let's take a look at the sterling versus US dollar, and this currency pair moved to a new session low, breaking below the low price from July. That low price came in, I'll put a little horizontal line here, somewhere around the 117.61 level, to be exact. 117.59.4 was the low price for the in July. We tipped below that level yesterday and we fell below it here today. Unlike the euro and the Japanese yen, the price did move above it, but we stay below these lows through here. I would call this area between the 59 level and 118.06 as our resistance area, our new close risk area. Moved above the 59 level and then above the 118.06 level would give the short-term buyers some hope of further corrective action. This is what it looks like on the hourly chart. This 118 level on the hourly chart is a more defined support or resistance area, 118.02-ish type level, I think, to 06 right through here. Get above that level, it's more bullish for the sterling versus US dollar. I want to take a look at the Aussie versus US dollar. This is the hourly chart, and taking a look at the Fibonacci from our low price in July 14th to our high price here, the market moved down and took out the prior low from Friday's trade, but still remained above the 61.8% retracement at 98.54.8. That is bookended by other swing highs, swing high, swing low through here the last time the price revisited this area. And on Friday, the market came down to the top side of that swing area, just above the 61.8. In trading yesterday, we held above those levels, and in trading today, we dipped below the levels, but we still found support against the area, and the price pushed up off of that level. We have the falling 100-hour moving average resistance above, and along with the 50% retracement, and we have these other swing lows through here: swing low, swing low, swing low, swing low, between the 0.6869 level and 0.68847 level. We've traded above and below it here today, as you can see, up and down type of trading day for the Aussie versus US dollar. But what we do know is there's a clear floor down here for the pair that if it moves below, it's more bearish. If we are able to stay above it, and there's reason to be dip buyers down here, but you need to see more upside momentum through these levels in order to push the price higher. That's the goal, but some support in the Aussie versus US dollar. My name is Greg Michalowski. We have some PMI data coming out at 9:45. The services, the flash services and manufacturing data coming out. I think we have Neil Kashkari speaking, preparing for the Jackson Hole Summit coming up later this week. My name is Greg Michalowski. Again, good fortune with your trading. Bye-bye.